Hi, Jimmy. How are you doing?
I'm good, thank you. Happy New Year.
Okay, we are back. Investing Bro Market Talk, episode 15. Yes, we took a break for holidays, December as usual. And yep, Happy New Year, everyone. And once again, for those who are joining us for the first time, so this is where me and Jimmy, we try to meet at least bi-weekly to talk about some of the latest happening in the market today. So, of course, I think one of the most exciting topic for this week is the Mapletree merger. So, two REITs is actually going to merger. It's going to merge. Sorry, Mapletree Commercial Trust and Mapletree North Asia Commercial Trust. They're actually going to merge into one huge entity. So, we're actually going to dive deep into this merger, looking at some of the numbers. And of course, after that, we are actually going to give our opinion on, how we actually look at this deal. Anything to say before I just flash my slides, Jimmy?
Hey, yes, I think you should do this topic because I have both MCT and MNACT. So it's good that you jump into this and we can all look into the details, whether if this merging is good for investors or not.
Okay, so here we go. So let me just share my slides. Okay, so as you can see here, okay, let me just get it. Okay, great. So as you can see here is actually in the papers, this was announced 31st December, so last day of 2021, Mapletree Commercial Trust, Mapletree North Asia Commercial Trust proposed merger. So what I did was this, I actually went to look at the company presentation. So if you're interested, it's actually available in the SGX website under company announcement, and actually scrape off some of the information which is, I believe, useful to me, useful to you. So now, this is what's going to look like after they merge. So basically, they would have what I call a regional portfolio. Also, 51% of the portfolio will be in Singapore, as the number says, 26% in Hong Kong, 11% in China, 10% in Japan, and 2% in Korea. So they are going to have a diversified portfolio in terms of geography. So this is one of the main things I actually gathered from this slide. And these are some of the numbers if you're interested. So after they merge, occupancy rate about 97%, and the gearing ratio is 39.2. This is how the merger is going to be done. Okay, as you can see here, it's likely that the script only consideration is going to happen. So of course, we probably need further details to confirm that. But it seems that this is going to happen, which means to say, if you hold one unit of MNACT, which is Mapletree North Asia Commercial Trust for short, you are likely to get 0.5963 of a new MCT unit, which is Mapletree Commercial Trust. So it's a very simple unit swap. So for those who have MNACT, you get turn it into MCT based on this ratio. And of course, if you have MCT, so things will remain as status quo. Also, this is how the merger is going to happen from a shareholder's perspective. The other thing that actually caught my attention here is this, they are going to change the fee structure, at least for MCT, Mapletree Commercial Trust. As you can see here, after the merger, for the merged entity, instead of just collecting a fee based on what we call AUM, asset under management, so they are collecting fees based on the distributable income. And there's a performance fee of 25% on year-on-year growth in DPU. So I personally prefer this structure, as this will be more in line with shareholders. That means the fund managers or the REITs managers, they are more motivated to grow the income, because only when they grow the income, then their fees will increase. And at the same time, there's actually this performance fee element which will further motivate them to grow. So I think this is a structure I personally like, as compared to the previous one. Most of the fees actually comes from the asset under management. So yes, you can have big asset, but if the asset don't perform, they still get the fee. So I do like this new arrangement, at least from a personal basis. Now, this is also something quite interesting to me. As you can see from this slide, they are going to leapfrog to top 10 largest REIT in Asia in terms of commercial REIT. Commercial REIT, they're going to be top 10 largest. So MCT was in 13th position, MNACT was 29, so a combined entity will hit 7. Now, why this is interesting to me, so if you are in the real estate industry, you will know, so a lot of deals, you need the size to be even invited to look at the deals. So let's say, for example, if the REIT is too small, you can't even access to a lot of good deals. You are not even invited to actually look at some of the very good deals or some of the very large deals available globally. So if let's say you are of substantial size, okay, you get invited, and in that sense, you have a better chance to have access to some of the better deals available globally. So indeed, there is economies of scale in terms of real estate. So bigger is actually better in real estate. Now, of course, at the same time, with the merged entity, there will be some savings. So I think this is actually quite interesting to me. So this is a summary slides, of course, by the company on what are some of the benefits of this merger. So they create a proxy key gateway market of Asia. So basically, with these two combined, that means from an MCT perspective, it's no longer just Singapore properties, it's a global property. Okay, I wouldn't say global, regional portfolio, and there is a greater way to grow. Okay, so anchored by high quality and diversified portfolio. Okay, leapfrog top 10 largest REITs in Asia. I mentioned that just now. Well placed to pursue growth opportunities through a ready platform, attractive financial benefits to unit holders, and of course, strong and continuous support from the sponsors. So this is, of course, in the words of the company, and these are the benefits they are expecting. So please take note of the timeline. So the merger is not going to happen tomorrow. So of course, there are still a lot of administration to be done. As you can see here, if everything goes well, the merger will only happen at end June 2022. So you have a lot of things to go through before the actual merger will happen. And June 2022 is likely to be some of the earliest date if things goes on smoothly. Now let's look at how the market reacted when the news came out. So this is the stock price of Mapletree Commercial Trust, MCT. Okay, so this is 31st December when the date was being announced. As you can see here, when the market opens after the new year, the price actually drops. The price drops from about $2 to currently it's about $1.83. As for Mapletree North Asia Commercial Trust, you can see that the price is more or less quite stable. Okay, so at the last week of 2021, it's trading about 112, and now we're looking at the price of 109. So just in case, if you're wondering if there's any arbitrage profits to be made, so sad to say the answer is no. If you just do a simple mathematics, 0.5963, so this is what's going to get if you have MNAC trust right now, multiply by 1.83, okay, which is the price. Okay, of course, based on this date, okay, you'll get 109. So there isn't any arbitrage profit to look at. So for those who are looking at that, sorry, cannot this round, unlike the last time when we actually did for SPH. So this round, nothing much for you to get. Now, so what is one of the main reason for the price to drop? Okay, so as you can see from this article, with the merger, Moody's, which is some of the credit rating agency, they are likely to downgrade MCT, or either that they're actually going to review MCT for their downgrade. And it's not difficult to understand why. Okay, before the merger, the MCT gearing ratio is 33.7%. After the merger, it will go up to 39.2. Okay, so which means that means from an MCT perspective, they are going to have more debt compared to their assets. So of course, some of the credit rating agency may not like it and may actually want to downgrade. And I think that is one of the main reasons that caused the prices to come down. Okay, so this is some of the background information I have gathered with this merger. So of course, now we share our opinion, how we go look at it. So before I do so, let me just invite Jimmy to share his thoughts. Jimmy, all yours, please.
Okay, so I have both units, MCT and MNACT, but I have more MNACT compared to MCT. So with this merging, it actually benefit me more as a personal point of view, financial gain. That basically is is a welcome news to me. But then as an investor, merging these two REITs into one, in the long term, I personally do not quite like it. Reason is being because that's the reason why I want to own more units of the MNACT than MCT, because MNACT, they have property in China, mainly in Hong Kong, and some property in Japan. And that's exactly why I would love to be in those markets rather than the local market. And now if the two REITs merge, I have basically been forced to take up, after the merging, 51% of the local market, which I don't really want that because of other REITs portfolio that I'm really holding. So, so my point here is this: it really depends on which side you are in. Let's say if you're on MCT side, obviously, you do not want to expose to the overseas market, then you feel that this is not a good merging. And likewise, on the other hand, I am more on the outside Singapore property, and then I look at MCT. That's basically not my cup of tea. But then, looking back, let's say if you do not own any of these two units, two REITs, then perhaps this is a good time to consider, because this is actually a very well-balanced REITs portfolio, both in Singapore and overseas market. That is perhaps a good time. So it really depends on what type of investors, where you are right now, what is the holding, and you can actually make a good, proper, wise investment decisions. Over to you, Ian.
Thank you so much, Jimmy. So my views are quite similar to yours, especially your last part. I think now with this merged entity, it seems that it helped them to have better focus for growth. With a regional portfolio, they can definitely have larger areas for growth. So this is especially for those who were previously MCT investors. They have, now a greater spectrum. Instead of just looking for properties in Singapore, you can actually look for properties in the different region. And again, from the perspective of MCT, with a more balanced portfolio in terms of geography is safer in that sense, so you are not subjected to any concentration risk in any particular country. Okay. And of course, just want to reiterate what I mentioned just now with the merged entity. They are now bigger, stronger. Economies of scale, that's one thing. You can probably save some money there. At the same time, they once you get bigger, you actually get invited to some of the better investment deals that is available on the table. So to me, it seems like it's at least relatively speaking, is more well positioned for growth. I actually do look forward to actually accumulate a little bit more of this REIT in actually my portfolio. And I think at this price, I wouldn't say it's particularly cheap or expensive. You just look at the price to book. Yeah, but I think over time, I probably will accumulate a little bit more. From the fundamental perspective, it actually looks very good to me. Okay, so Jimmy, anything to add before we call it a day?
Yep, that's all from me.
Okay, short and sharp. So you have been watching Investing Bro Market Talk episode 15. Hopefully this short clip can help you make better investment decision. If you like what you see, do us this little favor, click on the like, share, subscribe button, okay, so that more people can benefit and will be more motivated to do more such videos. So with that, hopefully we get to see you next week, and take care. Happy New Year. Okay, bye everybody. Bye-bye.